Welcome back, members. The second session on the composite schemes under GST. We have the eminent and the dynamic and young speaker Shubham Ketan. Before the start the session, I'm very briefly introduced because we run the short of time with more than 25 minutes. Shubham Ketan is a BCom honors from the St. Xavier's College. He is a qualified chartered accountant in the year 2012 at the age of 21 years. He got the 74% marks in the indirect tax. It gives the indication that what's the passion at the student level having on indirect tax. And he is also qualified the company secretary in the year 2011 at the young age of 20 years. And is also qualified in diploma in information and systems audit, and he is also qualified the law graduates from the Bengal State University in 2019. He is currently partner in of tax regulatory division of Sri S. Ketan and Associates, a reputed middle-sized chartered accountant firm in Kolkata since 30 years. He is a member in the GST and Indirect Tax Committee of our institute for the year 2019-20 and 18-19. He is also member of State Council and Economic Affairs and Taxation Committee and various other committees of Confederation of Indian Industry for the year 2019 and 20 and 20 and 21. He achieved so many the professional achievements. He authored the book on the practical guide to GST on textile industry, published by Bloomberg's publication in February 2020. He contributed for the drafting and vetting the technical guide on the annual return and GST audit published by our institute committee of GST. He part of the drafting team for the books Exempted Supplies under GST, Background Material on GST for the commerce students, Supplies to and by government, and other publication which has been released by the Indirect Committee of ICAI. He is a regular contributor to the various articles in the professional and industrial forums. With this very brief and fast introduction, I request Shubham Ketanji to take another the 1 hour 10 minutes or 20 minutes for the to get the members benefits. Thank you, Shubham Ketan.
Thank you so much, Chinaji. I first of all would like to thank you for giving my introduction, and also to SIRC and to IDTC as well for inviting me here as a speaker on this topic of composition scheme, which again is a very important topic which we are giving substantial time to in order to get into the intricacies of this topic. We'll try to make this topic as interactive and as easy to understand as possible for all the participants. Composition scheme, what is the scheme all about? What if someone gets out of the scheme, gets into the scheme? What are the provisions that one needs to follow? Are all we are going to discuss about. Now, provisions of composition scheme. Section 10, which talks about composition scheme, starts with notwithstanding anything contained to the contrary in this act. That means composition scheme overrides all the other provisions of the act, but subject to the provisions of subsections 3 and subsection 4 of section 9. That means section 9.3 and section 9.4. These two are the only provisions which the composition scheme does not override, right? That means 9.3 and 9.4 will still be applicable on a person who is opting for the composition scheme. He still needs to pay taxes under reverse charge if he's opting for composition scheme. So notwithstanding anything contained to the contrary, subject to provisions of 9394, a registered person whose aggregate turnover in the preceding financial year did not exceed 50 lakh rupees. This again got increased to 1.5 CR through a proviso, but they are said that last year if my turnover was up to 50 lakhs, which got increased to 1.5 CR, may opt to pay. So somebody can opt to pay in lieu of tax payable under 9(1). So 9(1) is basically the normal tax. So in lieu of normal tax means instead of normal tax, I can pay under composition scheme. I would not have to pay under the regular scheme. I can pay under the composition scheme and be not required to pay under the normal scheme. And the provisions of 9.3 and 9.4 would still be applicable upon me. So 9.3 and 9.4 are not overridden. So apart from composition payments, I would still be required to make payments of 9.3, 9.4 at an amount of tax calculated at such rate as may be prescribed. So there may be a rate prescribed for the composition scheme here, right? Now, composition levy. What happens to composition levy? Aggregate turnover less than 1.5 CR. If my aggregate turnover was less than 1.5 crores in the preceding financial year, or 75 lakhs in the preceding financial year. Now, first of all, we need to understand aggregate turnover. Thereafter, we need to understand this limit. What is aggregate turnover? I think it must have been touched upon in brief. Nevertheless, for the purpose of composition scheme, I'll touch it once again. Aggregate turnover means it would include taxable supplies, exempt supplies, exports, interstate supplies. So interstate supplies is separately stated from taxable supplies. Why? Because taxable supplies has been defined under CGST Act as intrastate taxable supplies. So aggregate turnover will include all kinds of supplies, be it taxable, exempt, interstate taxable, export, and it will include the turnover on an all India basis. So basically a person who is falling within this, who is wanting to compute his aggregate turnover, needs to compute the turnover for all the registrations which are under the same PAN. So one PAN may be having multiple GSTNs. For all those GSTNs, the turnover is computed on an all India basis. That means they are consolidated together for all the GSTNs which are under the single PAN number. And it will exclude taxes charged under CGST, SGST or IGST. Fair enough. And it will exclude a value of inward supplies on which tax is payable on reverse charge basis. So wherever tax is payable on RCM, of course, that cannot be considered as turnover. So if something is considered as turnover, in that case, it will only be those things which are appearing on the credit side of P&L. Something which is appearing on the debit side of P&L cannot be considered as turnover, right? So even if they would not have stated it, we would not have included inward supplies of RCM. So wherever inward supplies are there on which RCM is payable, it will not be included within the aggregate turnover. Fair enough. This aggregate turnover, for which period do we need to compute? For the previous financial year. If in the previous financial year my aggregate turnover was less than this amount, in that case I can opt for composition scheme. It is an option with me. Which are the states where the limit is 75 lakhs? These are the states which are mentioned in front of you. All the northeastern states and Uttarakhand. All these states have a composition limit of 75 lakhs. Above this, you need to pay under normal scheme. But apart from all these states, all other states have an aggregate turnover of 1.5 crores in the preceding financial year, right? Now, who all can opt for composition scheme? A manufacturer of other than notified goods can opt for it. So persons who are manufacturing certain notified goods are ineligible for this scheme. Which are these notified goods? Let's see. These notified goods are pan masala, tobacco and tobacco substitutes, aerated water, and for some reason, along with all these sin products, so-called sin products, they have also mentioned ice cream and other edible ice. So for some reason, they have also disallowed ice cream manufacturers to opt for composition scheme. So people who are manufacturing all these 4 products cannot opt for composition scheme anymore. But apart from this, other than notified goods, if I am a manufacturer, I can opt for composition scheme, right? Question comes in, how much tax do I need to pay? I need to pay 0.5% tax under CGST, 0.5% tax under SGST Act, right? That means 1% of aggregate turnover I need to pay taxes, right? So what do we mean to say? What do we mean by aggregate turnover here? We always include aggregate turnover as exempt supplies, taxable supplies, all these things are included, right? So as a manufacturer, I am required to pay taxes under this particular scheme at 1% of aggregate turnover. Means I would be paying taxes not only on taxable supplies but also on exempt supplies. So if I'm a manufacturer manufacturing both taxable and exempt goods, I would be paying taxes at the rate of 1% of the aggregate turnover, which means I'll be paying taxes on both taxable supplies and exempt supplies clubbed together, right? What about any other person apart from a manufacturer? So apart from a manufacturer, there are 2 other categories. One is a service provider. If I'm a service provider and I'm providing services in the form of restaurant, outdoor catering, wherein food is being supplied, right, for consumption. So either through restaurant or outdoor catering, my amount at which I need to pay taxes will be 2.5% CGST, 2.5% SGST. That means in aggregate, I need to pay 5% of the aggregate turnover. Once again, I will include both taxable and exempt supplies, right? We need to remember that whenever we are talking about aggregate turnover, both in case of manufacturer and service provider, we need to exclude those kinds of income which is earned by way of interest or discount on loans, deposits, or advances. So wherever interest is earned by way of loans, deposits, or advances, that would be excluded from my total aggregate turnover. So I need to pay taxes on taxable and exempt supplies, but I will not be paying tax. I will not be including interest on loan or deposits, even though they are exempt supplies, for the purpose of paying taxes, or for that matter, even calculating the limit of 1.5 crores and 75 lakhs. So whenever we are calculating the limit also for 1.5 crores and 75 lakhs, we will not include interest on loan or deposit. Also, if I'm a manufacturer or a trader, and apart from manufacturing and trading, my other income is only from interest on loans or advances, in that case, I cannot be disqualified from composition scheme. So what I mean to say is, normally, apart from restaurant and outdoor catering, no other service provider can opt for composition scheme. But simply because I am a service provider earning interest or loan, or simply because I'm a manufacturer or a seller and I am eligible for this scheme, simply because I'm earning interest on loan or advance, I cannot be disqualified from the scheme. So I would continue to qualify for the scheme even though I'm earning interest on loans or deposits. Now, what are the major features, other features of composition levy that we need to understand? Let's look at those. First, a person should not be making any interstate outward supplies. So as a manufacturer or as a trader who's opting for this scheme, I should not be making any interstate outward supplies. I cannot sell outside the state. If I am selling outside the state, I cannot opt for composition scheme. So in other words, what I can pay under composition scheme is only CGST, SGST. CGST, SGST of 0.5% each for manufacturer and trader, and restaurant or outdoor catering 2.5% each. The moment I make an interstate supply, I cannot pay taxes under composition scheme. I would have to opt out of the scheme, right? Next, this I have second point I have already discussed. Third, person should not be making supply through an e-commerce operator required to collect TCS. Now, which are the e-commerce operators who are required to collect TCS? All e-commerce operators wherein third-party sellers are selling. Let's understand this. I am having my own website. I am selling through my own website. In that case, there is no bar because there is no TCS involved, right? Second, I am a person who is not selling through my website, but only displaying goods on my website. Once again, I'm not an e-commerce operator required to collect TCS. Third, I am a person falling under 9.5. What are 9.5 services? 9.5 services provided through e-commerce operator are: first, transportation of passengers; number 2, accommodation in hotels; third is housekeeping services. So these 3 services, if I'm supplying through if I'm supplying through e-commerce operator, transportation of passengers, that means Ola, Uber services, or for example, if I am providing services of urban club housekeeping, or I am providing first is transportation, second is housekeeping, third is accommodation hotels, for example, OYO rooms. If these 3 I am supplying services through these 3 cases, in that case, I can still qualify for composition scheme. But apart from these 3, if I'm providing services through e-commerce operator or supplying goods through e-commerce operator, I cannot opt for composition scheme. So a restaurant which is supplying through Swiggy or Zomato, who is required to collect TCS, he will not be allowed to opt for composition scheme, right? I am a seller selling textile products. I am selling through Amazon. I cannot opt for composition scheme. I am a textile manufacturer, but I am a textile trader, but I am selling through my own website. I can still opt for composition scheme, right? Person making any supply of goods or services not leviable to tax is also not allowed to opt for composition scheme. So if I'm a person making any supply of goods or services not leviable to tax, what are the supplies which are not leviable to tax? Two major supplies: supply of alcoholic liquor for human consumption or sale of petroleum products. If I am selling petroleum products online, in that case, I'm not allowed to opt for composition scheme. If I'm selling petroleum products, in any way, example, I am having a petrol pump, I'm selling both lubricants and I'm selling both petrol as well. Lubricants are liable to GST, petrol is not liable to GST, is not leviable to GST. In that case, a petrol pump cannot opt for composition scheme. I'm a restaurant and the restaurant is supplying alcoholic liquor for human consumption. Once again, it is not, alcoholic liquor is not leviable to tax. That's why a restaurant which is supplying alcoholic liquor cannot opt for composition scheme. Otherwise, in other words, a restaurant not supplying through Swiggy, not selling alcohol, can only and only opt for composition scheme, not any other restaurant. Next, all taxable persons having the same PAN should also opt for the scheme. That means if I am registered in 2 different states, one in Chennai, the other in Karnataka, I'm having Tamil Nadu and Karnataka, I'm having 2 different registrations. and my aggregate turnover is less than 1.5 CR, then I have to opt for the same scheme in the two states. I cannot opt for normal scheme in Karnataka and composition scheme in Tamil Nadu or vice versa. I cannot do that, right? So all the taxable persons having the same PAN should opt for this scheme, right? Next, the person will neither collect taxes nor be entitled to any credit of input taxes. So if I'm a person which is under composition scheme, I cannot collect any taxes from the recipient. A classic example, a restaurant. Now, the GST rate of a restaurant is 5%, and even if they are opting for composition scheme, they have to pay 5%. But if the restaurant is paying under composition scheme, they cannot collect 5% from the customer. If they are under normal scheme, they can collect 5% separately from the customer, right? In both the cases, they would have to pay. Having said this, in both the cases, they would have to pay to the government. Only difference is, in case of normal scheme, they can collect and pay. In case of composition scheme, they have to pay out of their own pocket. Nor be entitled to any input tax credit. So one disadvantage of composition scheme is that they cannot take any input tax credit. And also whatever taxes the composition dealer is paying, that is also not available as a credit to the recipient, because composition dealer is paying out of his own pocket. He is not collecting any taxes. So in other words, a composition dealer, if he is not eligible to take any ITC, the entire credit chain gets broken. So if a composition dealer buys from a normal dealer who is levying GST, in that case, composition dealer would have to increase his cost and take it as part of his cost. And whenever he's selling the goods or services, the recipient would also not be able to take the credit if he's increasing the price because of the taxes. So once again, the composition dealer needs to, a person needs to assess properly whether or not he wants to opt for composition scheme. He needs to assess, there needs to be cost benefit analysis, that if I'm opting for composition scheme, yes, the cost of compliance will go down. Yes, I will get certain benefits in terms of lower manpower cost required for compliance. But at the same time, I will incur a loss in terms of the taxes of in the terms of input tax credit and in terms of not collecting taxes and paying out of own pocket. So composition dealer needs to assess the cost benefit very clearly. Thereafter, only take a decision whether or not they want to continue with this scheme or not. Permission will stand withdrawn from the date aggregate turnover exceeds 1.5 CR or 75 lakhs. Now, as I said, aggregate turnover limit is 1.5 CR for normal states and 75 lakhs for special category states. But as soon as my limit in the current year exceeds this limit of 1.5 CR or 75 lakhs. So first what I would do, I would compute last year's turnover if it is more than this amount. If yes, I cannot opt for this composition scheme in this year. If it is lower than the aggregate turnover of last year, in that case, in this year, I can opt for composition scheme, right? And this year, the moment my turnover exceeds this threshold limit of 1.5 CR or 75 lakhs, the permission will stand withdrawn and the assessee would be required to pay the amount, the difference of tax along with penalty. So if my turnover was assuming 1.1 crores last year and I opted for composition this year my turnover is 3 crores. I continued to pay under composition. So after it exceeded 1.5 CR, that means balance 1.5 CR, I would have to pay balance. Let's say the tax rate on the product was 18%. I would have to pay 18% minus 1%, which I have already paid under composition. That is 17% I would have to pay to the government along with penalty. So I would have to pay 18 minus 1, which is 17% along with penalty to the government, right? Now, composition taxpayer is allowed to supply services of 10% of turnover in a state of 5 lakhs or rupees 5 lakhs, whichever is higher. So a lot of cases, composition taxpayer used to face a problem that if he's supplying goods and if he supplies a single rupee of services, he could have been disqualified from composition scheme. So normally, apart from restaurants, nobody else can opt as a service provided under this scheme of composition. So in that case, they used to face a huge problem as to how they should continue under the scheme if they supply a single rupee of service. Example, I am a person who is selling mobile phones, right? In order to give certain assurance to my customers, I'm also providing them a guarantee that if there is any problem in the phone, I would repair that phone and I would collect a charge from you. I would repair the phone at a nominal charge. Now that turnover of repairing is a very low percentage of the turnover. It's of my total turnover. So in that case, I can still opt for composition scheme, provided the total amount of turnover from these services do not exceed 10% or 5 lakh rupees, whichever is higher. So it should be higher of these two, 10% or 5 lakhs. So assuming my turnover was 1 CR, 10% of that is 10 lakh rupees or 5 lakhs, whichever is higher. So up to 10 lakh rupees, I can provide services even if I'm under composition scheme. If my turnover was 30 lakhs, in that case, up to 10% of 30 lakhs, which is 3 lakhs or 5 lakhs, whichever is higher, that means up to 5 lakhs, I can still opt for composition scheme. Up to 5%, 5 lakhs, I can still provide services. What are the other major features of composition scheme? A person who is under composition scheme can neither be a casual taxable person, nor can he be a non-resident taxable person. That means he cannot opt for temporary registration under composition scheme. That means he cannot opt for either temporary registration in a state or in a different country. I cannot opt for composition scheme, right? Next, during transition, stock held on appointed date should have been under interstate trade or commerce. This is only for 1st July 17 when GST had come in. So they had said that if you're opting for composition, you should not have any stock which you have purchased interstate, which I'm not sure why it had been the case. Anyways, goods held in stock should not have been purchased from unregistered persons. So once again, as on the transition date, what they are saying is you should not have purchased from unregistered persons. And if purchased, you should have paid under reverse charge. This is only as on 1st July. This is not applicable as of now. Next, on inward supply of goods or services, tax should be paid under reverse charge. We have already discussed this, that even if I'm under composition scheme, section 9394 would be applicable upon me, and I would still have to pay taxes under reverse charge wherever applicable. So composition scheme is only in lieu of outward taxes paid on outward supply. It is not in respect of inward supplies on reverse charge. It is not in respect of those, right? Next, at the top of the bill of supply, it is required to be written. So whenever any composition taxable person supplies goods or services and he is raising a bill of supply, he's required to raise a bill of supply. At the top of the bill of supply, he is required to write composition taxable person not eligible to collect taxes. So there have been quite a few cases where composition taxable person have by mistake collected taxes. That's why for the recipient to know, the supplier should mention very clearly that he's a composition taxable person, because from a GST one cannot know if he's a composition dealer or not unless one actively goes and searches for it. So in that situation, a composition dealer is required to mention on his invoice that he's a composition taxable person and he cannot and he is not eligible to collect taxes. He needs to write that. Not only this, even on every notice or every signboard at the prominent place of business or additional place of business, every person is required to write that he's a composition taxable person. So I am a person who is required to write on every notice or signboard at a prominent place at principal or additional place of business that I am a composition taxable person. I need to write that specifically. right? Without this, I cannot opt for this scheme. Now, I have some questions just for the interest of the audience, which I request all of you to answer. Any questions that you have, please raise those in the Q&A section, because I would answer those at the end in the Q&A section, right? I think it would be easier. In meanwhile, I'm asking a few questions which I request you to reply in the chat box, right? First, can a person opting for composition scheme purchase goods from outside the state? Let me see whether people are actually involved in the discussion. Let's see. I can see a number of answers coming in. No, everyone is saying no. Can a person opt for composition scheme purchase goods from outside the state? Please note, the restriction is only and only for interstate sales. I cannot make interstate outward supplies. There is no restriction on purchase. I can still purchase from outside the state. There is nobody who can bar me from that, even if I'm under composition. As it is, I'm not taking credit, so it doesn't matter to the government, right? So this is important. A few questions like this, everyone will have an open mind after this. Can person opting under composition scheme have multiple registration in other states as well? Can I have multiple registrations, or I need to have only single registration if I am opting for composition scheme? I'm again getting a mixed bag of answers here. Some people are saying only one registration is allowed. Some people are saying, yes, you can have multiple registrations. So I'm getting both kinds of answers here. Yes, you can have multiple registrations, provided your aggregate turnover is less than 1.5 CR. If your aggregate turnover is less than 1.5 CR, you can still opt for multiple registrations. And the condition, the third question, can a person opt for composition scheme in one state and regular scheme in the other state? No, this is not allowed, which all of you have answered absolutely correctly. I can have the same scheme in two different states. I need to have the same scheme. I cannot have a composition scheme in one state and regular scheme in the other state. I cannot do that. I have to have the same scheme in both the cases. Next, can a petrol pump supplying lubricants opt for composition scheme? Next question. If I'm supplying lubricants and I'm a petrol pump, can I opt for composition scheme? The answer is a big no, which most of you are answering correctly. I cannot opt for it because I'm supplying goods which are not leviable to tax. I cannot supply goods which are not leviable to tax. Next, can a person paying tax under composition scheme make supply of goods to SEZ? Can I make supplies to SEZ? Once again, a mixed bag of answers coming in. Yes and no, mixed bag of answers coming in. So even though the SEZ is in your state, the law is deeming it to be an interstate supply. So wherever the law is deeming something to be an interstate supply, I cannot make any supply interstate because I am a composition dealer. As a composition dealer, I cannot make interstate supplies. So I cannot supply to SEZ also. I cannot make exports. I cannot supply to SEZ. Next, will composition scheme be applicable on exempt supplies? I have a turnover of 1 crore, 70 lakhs is taxable, 30 lakhs is exempt, right? Question, whether I need to pay taxes on 1 crore or 70 lakhs. Request everyone to answer. 1 crore or 70 lakhs. My total turnover is 1 crore. Taxable is 70 lakhs. 30 lakhs is exempt. A lot of people are saying it is more than 1.5 CR. No. The total turnover is 1 CR. 70 lakhs taxable supplies, 30 lakhs exempt supplies. Whether I need to pay on exempt supplies, yes or no? I'm getting a mixed bag of answers here. I intentionally had left one point here, which I wanted everyone to have a look at very closely. Since I've asked this question, I know everyone will now apply their minds and try to figure out the answer of this. If we look at manufacturer and service providers, they are required to pay taxes on aggregate turnover. That means on 1 CR. But when we are talking about a seller who is a trader, they would have to pay taxes on taxable supplies only. So a person who is not a manufacturer, not a service provider, would pay taxes only on taxable supplies and not on exempt supplies. So depending on whether I'm a manufacturer or a trader, I would pay taxes. If I'm a manufacturer, I would pay on 1 CR. If I am a trader, I would pay on 70 lakhs. Of course, 1% of that needs to be computed. So please be very careful regarding this. The wordings used in the rules is aggregate turnover, or turnover of the state rather, I would say, for the manufacturer, but for the trader it is mentioned as taxable supplies. So the language used are different in both the cases. So please be very careful about this, depending on the relevant person. Now we are talking about the new composition scheme. Now there is a new composition scheme which has been notified by the government. This is a composition scheme. A lot of service providers started complaining that why are we not getting the benefit of composition scheme, simply because we are service providers. We are also small service providers. We should also get the benefit of this scheme. So the government brought in a new scheme effective from 1st February 19 through a notification. Thereafter, it was brought in the Act itself through Finance Act 2020, wherein a service provider, rather I would say any person who is disqualified from the earlier scheme, a person who is not eligible for the earlier scheme for any reason, because he's a service provider, he's supplying both goods and services, and his service turnover is more than 10% of the turnover, aggregate turnover of 5 lakh rupees, whichever is higher. If you remember, we had talked about it under the normal composition scheme. If I'm disqualified from that scheme, if I'm disqualified from the earlier composition scheme, I can still opt for this new composition scheme. I have an option in this case to pay taxes at the rate of 6% on first supply of goods or services up to 50 lakh rupees. So assuming up to 50 lakh rupees, I have an option to pay taxes at 6% on the first supplies. For example, in 2021, right? Up to 50 lakh rupees, I can still opt for this scheme and I can pay taxes at the rate of 6%, right? Of course, this will exclude, this 50 lakhs will exclude interest on loan or deposit made on or after 1st April by a registered person. So from 1st April, we will calculate this 50 lakh rupees, right? And I would have to pay taxes at the rate of 6% till my turnover reaches 50 lakhs. What are the conditions subject to which I can opt for this scheme? That we need to note very carefully now. supplies by a registered person whose aggregate turnover in the preceding financial year was less than 50 lakh rupees. So if my turnover was less than 50 lakh rupees in the previous financial year, that means in 2019-20 my aggregate turnover was less than 50. In that case, in the year 2021, up to the first 50 lakhs, I have an option to pay taxes at the rate of 6%. Also, if I'm a newly registered taxpayer, I do not have a preceding financial year turnover, then also up to the first 50 lakhs, I have an option to pay taxes at the rate of 6%. I do not have to pay taxes at the rate of 18%. Also, who is not eligible to pay under composition scheme. So what is important here, that I should not have been eligible itself for the first composition scheme, right? If I'm not eligible itself for the first composition scheme, then only I can opt for this scheme. It does not mean that I did not opt for the earlier scheme. So there's a difference. Whether I was eligible, I did not opt for the first scheme, or I was not eligible itself for the first scheme. If I was eligible but I did not opt for the first scheme, I cannot opt for this new composition scheme. But if I was ineligible, then only I can opt for this scheme. If I was ineligible for the earlier scheme. Who is not engaged? Third point, who is not engaged in making any supply which is not leviable to tax. So once again, a petrol pump has once again been disqualified here. Even if I'm a service provider, or let's say a person who is supplying goods or services which are not leviable to tax, I cannot opt for this scheme. So right. So even if I was disqualified under the earlier composition scheme because I'm a restaurant serving alcohol, I cannot opt for this scheme. New composition scheme also. That means I have to supply goods, only those goods which are leviable to tax. Leviable to tax means alcoholic liquor and petroleum products are excluded. Everything else is leviable to tax. Who is engaged in making any, who is not engaged in making any interstate outward supply. So I cannot opt for this scheme if I'm making interstate supplies. Once again, if I am a service provider, I'm opting for this scheme. I cannot raise an IGST invoice. I cannot make an interstate supplies. I would have to make local supplies. This is important. I cannot make interstate supplies if I'm opting for the new scheme. Next, who is neither a casual taxable person nor a non-resident taxable person. That means once again, I cannot have a temporary registration. Next, who is not engaged in making any supply through an electronic commerce operator who is required to collect TCS. So I cannot make any supply through e-commerce operator who is required to collect TCS, right? So what I mean to say here is that if I am a person who is required to collect TCS, in that case, I cannot make if I am supplying through an e-commerce operator who's required to collect TCS. For example, once again, a restaurant supplying through Swiggy or Zomato, he is once again disqualified even for this new composition scheme. He cannot opt for this new scheme simply because he's disqualified from the earlier scheme, because he's supplying through electronic operator who's required to collect TCS. Next, who is not engaged in supplying ice cream, tobacco, or pan masala. So if I cannot supply ice cream, tobacco, or pan masala here, right? So we need to remember this. Please remember this 6% is 3% CGST, 3% SGST. This is not 6% CGST, 6% SGST. 3% CGST, SGST, both. Once again, the same condition. All taxable persons having the same PAN should also opt for this scheme. So if I'm opting for this scheme, all the other states, wherever I'm registered, I should opt for this scheme itself. Thereafter, I will neither be able to collect taxes nor be entitled to any input tax credit. So I cannot collect taxes, I cannot be entitled to ITC either, right? Next. A registered person opting to pay central tax at the rate of 3%, that means 3% CGST, 3% SGST, shall be liable to pay central tax at the rate of 3% on all outward supplies. So what they are meaning to say here is that he does not need to pay taxes only on taxable supplies, but all those supplies wherever he is making outward supplies, be it taxable or exempt, he needs to pay taxes at the rate of 3% on all those outward supplies. But reverse charge, as like the earlier composition scheme, reverse charge is still applicable for this new composition scheme for service providers. So I would still be required to pay under 9.3 or 9.4 even if I'm under the new composition scheme. So why would I opt for this new composition scheme? Only and only if I'm disqualified from the earlier composition scheme, right? Otherwise, nobody would want in the first place not to. So earlier scheme has a tax rate of 1% or 5%. This has a tax rate of 6%. Why would anybody pay taxes at the rate of 6%? Why would anybody be paying taxes at the rate of 6% if they are allowed, if they can pay taxes at the rate of 1% or 5% under the earlier composition scheme, right? So this we need to remember. Just a scenario analysis here. If I am supplying taxable goods at the rate of 15 lakhs, exempt supplies is 10 lakhs. So my total supplies is 25 lakhs. 6% of 25 lakhs is 1.5 lakhs. I would be required to pay 1.5 lakhs under this scheme. Even if I'm making exclusive supply of goods, 25 lakhs, 6% of that is 1.5 lakhs. Exempt supply of services, 25 lakhs, 6% is 1.5 lakhs. All these cases, I would be required to pay 1.5 lakhs, right? No matter what. Now, what are the returns that are required to be filed here by the composition dealer? First of all, he needs to furnish a statement in ITC 03 for payment due to capital goods and inputs. So normally, if I am a composition dealer, right? Assuming first I was a normal dealer, now I'm going into composition scheme. In that case, whatever stock that I'm holding as on the date of movement into composition scheme, I would have to pay taxes on those stock, right? So I would have to pay taxes on that stock on both inputs and capital goods. I would have to pay taxes. Please remember this. I cannot exempt myself from paying taxes on the stock, on both inputs and the capital goods. Next, of course, capital goods calculation would be slightly different. I cannot be expected to pay taxes on the entire capital goods. There's a depreciation of capital goods of 5% per quarter or part of the quarter. For example, I had bought certain capital goods on 1st April 2018. Now I'm going into the composition scheme on 1st April 2020. That means for 8 quarters, I had used those capital goods. So 5% per quarter means 40% would be the depreciation. Balance 60% I would have to reverse under ITC 03. And on inputs, the entire portion, whatever I am holding as on the date of movement from normal scheme to composition scheme, I would have to pay taxes. Next, make payment of taxes in CMP 08 by 18th of the month succeeding the quarter. So, for example, if I am going into composition scheme, from April to June, example, is my first month for which I am filing my returns. I would not have to file my returns quarterly. I would have to only make payment of taxes through this form CMP 08 by 18th of the month succeeding the quarter. And I would have to file one return only, which is GSTR 4, by 30th April of the next financial year. Of course, in this year, due to COVID, this time period was extended. But for 2021 example, the time period is 30th April 2021. That is the due date for filing return for composition dealers for the year 2021 in one go. So it's one annual return now for composition dealers in GSTR 4. And CMP 08 is a form which they need to file for making payment of taxes on a quarterly basis. Let's look at this form, composition CMP 08. If we look at this form, it's a very simple form wherein we are required to mention our outward supplies, inward supplies attracting reverse charge. Then we come to the total tax payable. Thereafter, we come to the interest amount, if any, which is payable if there is any delayed filing of CMP 08 after 18th of the succeeding quarter. Then we have to show the total tax and interest. It's very simple. Total tax on outward supplies, total tax on reverse charge, total tax, interest, and tax plus interest. That is the only thing which is required to be given in this form. It's a very, very simple form. Now, GSTR 4 is a form which is inward supplies, including supplies on which tax is paid on RCM. So basically, if I am filing an annual form as a composition dealer, what are the breakup that I would have to provide? Inward supplies received from a registered supplier, inward supplies received from a registered supplier attracting reverse charge. So 4A is forward charge, 4B is reverse charge, right? If I am getting any inward supplies under forward charge or reverse charge. Sorry. So be it forward charge or reverse charge, I would have to give invoice, I would have to give the total GST and wise details of the supplies that I have received from registered suppliers, rate GST wise and rate wise. I would have to give the details of supplies, both under forward charge and reverse charge. Also, inward supplies received from unregistered dealers. If I'm receiving supplies under unregistered dealers, this will come in 4C. 4D will consist of import of services. So wherever import of services are involved, I would have to disclose in 4D. Thereafter, whatever taxes we have paid in CMP 08, that will be auto-populated in GSTR 4. That means total tax, whatever we have paid, will automatically come in. Also, we have to give the total value only of outward supplies made during the year and inward supplies which are liable to reverse charge. Only total value of supplies made during the year, rate wise. Total, again, normally only one rate would be applicable upon me, so I would have to provide the rate also. So outward supplies, I would have to give the details, how much I have supplied. Inward supplies, how much RCM I have paid, that I would have to give the details. TDS and TCS credit received would be the amount which has come in the cash ledger. If I am under composition scheme, if I am getting TDS, TCS, that will come here. Tax, interest, late fees payable and paid. So how much tax has been paid by me already through CMP 08? How much tax was payable after making this annual form of GSTR 4? If at the time of making this annual form we find out that any tax has been missed to be paid in CMP 08, we need to pay that balance amount through GSTR 4. And also any interest or any late fee which is payable because of delayed filing of GSTR 4 or CMP 08, that we would have to disclose here and file the same. Further, if you have deposited any amount in the cash ledger that you want to claim as a refund, it may happen you have by mistake deposited more amount through CMP 08 in your cash ledger. Then you have an option of claiming a refund of this amount from the cash ledger through GSTR 4. Now, what are the forms that we have to fill up while opting for this scheme? If I am opting for this composition scheme and I'm a new registrant, in that case, in the registration form itself, I can apply for composition. It will be applicable from the effective date of registration. If in any subsequent year I want to opt for composition scheme, example, I want to opt for composition scheme for 2021-22, then before commencement of the financial year, that means before 31st March 2021, I am required to file this form CMP 02 to disclose my intention of going into composition scheme for the year 21-22, right? Details of stock in form ITC 03 within 180 days from the date of commencement of financial year. So as I said, if you are going into a composition scheme from the normal scheme, you have to file this form ITC-03 within 180 days of the commencement of the financial year. So you have to pay the taxes on the stock by within 180 days of the commencement of 1st April 21, which is 30th September 2021. Till that date, you have to pay the taxes on the stock which you had been holding as on 1st April 2021. Of course, if you're opting for the composition scheme before the beginning of the financial year, it would be applicable from 1st April, which is beginning of the financial year. Composition scheme will be invalid if I cease to satisfy any of the conditions. That means if whatever conditions that we have discussed till now, if I don't satisfy any of the conditions, let's say my turnover increases beyond the specified limit, in that case, I need to intimate in CMP 04, which is to be filed within 7 days of the occurrence of the event. So within 7 days of the occurrence of the event, I am required to file CMP 04, right? And thereafter, I would have to disclose my stock in ITC 01 within 30 days whenever I'm moving from composition to normal scheme. I can take ITC on those stock. So when I'm going from composition to normal, whatever stock I am holding for which I needed to take ITC, which I could not take due to composition scheme, that I can take because I'm going into normal scheme. If I'm going from normal to composition, I would have to pay taxes on the stock which I've been holding on the date of moving out. If I want to withdraw on my own from composition scheme, I can again provide that intent through CMP 04 before the date of withdrawal. Next, if proper officer has reason to believe that the person is ineligible or has contravened the provisions of the act. If the proper officer has any reasons to believe that the person is ineligible or he has contravened any of the provisions of the law, in that case, a notice can be issued in CMP 05, right? Reply is to be filed by the relevant person in CMP 06 within 15 days of the receipt of notice. So CMP 04 is a form wherein a composition dealer would give his intent, but if the composition dealer does not provide his intent and does not inform to the government that he is no longer allowed to opt for the composition scheme, for example, he has made any interstate outward supplies, he did not realize it, in that case, the department can issue a notice in CMP 05 for which a reply is to be filed in CMP 06 within 15 days, right? If the reply is accepted by the officer, well and good, he can continue under the composition scheme. If the reply is not accepted, the officer will pass an order for denying the composition scheme. Thereafter, within 30 days, whatever stock was there on the date when the officer denied it, the person can opt for this. The person can take the input tax credit under ITC 01, right? So depends on whether I withdraw intentionally or I myself say that I'm not satisfying the conditions or the officer comes to me. In all the cases, I would get the input tax credit on the stock that I'm holding from the date I'm moving into normal scheme. Now we are talking about the date, effective date when the withdrawal will be considered to have been made. The withdrawal will be considered to have been made on the date which is indicated in the application form. So if I'm filing CMP 04, it will be on the date when I'm filing CMP 04. Such date may not be prior to the commencement of the financial year in which such intimation is being filed. So before the commencement of the financial year, I cannot file this form. So if I'm opting during the year that I want to opt out of the scheme, I cannot opt out before the beginning of the financial year itself, right? Or if the officer is denying me that you cannot opt for the scheme anymore, then they cannot, the third case, then the effective date cannot be prior to the date when I have contravened the law, right? So it cannot be prior to the date when I have contravened the law, right? Proceedings will be initiated under section 73 or 74 from the date of contravention to the order date, right? So this we need to remember. Proceedings will be initiated under section 73 or 74 as the case may be, from the date of contravention to the date of order. Okay, what is a composition dealer supposed to do? He's supposed to issue a bill of supply and not a tax invoice. So what are we saying? That a registered person who is supplying under section 10 will, instead of a tax invoice, issue a bill of supply, right? Which is what is a bill of supply? Bill of supply is a document wherein no tax is given, for which the particulars are there. Also, if the recipient is unregistered and he does not require an invoice and the value of goods or services less than 200 rupees, then instead of giving small bill of supply for 100 rupees for B2C supplies, he can issue one consolidated bill of supply. That is an option available with the composition dealer, rather than issuing one small bill of supply for less than 200 rupees for B2C supplies. So these are the particulars which can be there in the bill of supply: name, address, GSTN of the supplier, serial number, recipient's GSTN, HSN code, description, value of goods or services, signature. There's nothing to discuss here in this per se. Couple of issues. If a person was eligible for composition scheme under section 10(1), thereafter became ineligible, he cannot opt for 10(2)(a) as time limit expires. For example, I was a person who was under composition scheme. I was a person who was dealing in goods, right? Now, during the year, I start dealing in services. Automatically, I have to move out of the old composition scheme. But I cannot move into the new composition scheme because the time limit when I can opt for the new composition scheme is before the beginning of the financial year. Since the financial year is already started, during the year, I cannot move from one composition scheme to the other. Right? Next, if a person gets registered after reaching turnover of 19 lakhs, will the threshold of 50 lakhs be calculated after including the earlier turnover? So a question, I request everyone to give their views on this. If, let's say, I take registration after reaching turnover of 19 lakhs. Now, whether or not I can opt for composition scheme. For example, the financial year started on 1st April 21. I reach 19 lakhs on 30th June 2021. 19 lakhs. I opt for registration now. Now 50 lakhs will start from 1st July again or from 1st April. So the 50 lakhs limit, threshold limit, which I need to calculate for finding out whether I can be in the composition scheme, will it start from 1st April or 1st July? Request everyone to answer. Absolutely correctly. It will start from 1st April. Most of you all have answered correctly. It will start from 1st April itself, right? So balance 31 lakhs you can compute. Also, will he pay taxes after he goes into composition scheme, after he opts for registration? Will he pay taxes on balance 31 lakhs or full 50 lakh rupees? So he's opting for normal composition scheme from 1st July. Will he pay taxes on 31 lakhs or full 50 lakh rupees? I'm getting a mixed bag of answers here. Please remember, I cannot be made liable to pay taxes before the date of registration if I was not liable. I can only pay taxes after I have taken registration, and I can only take registration. I have taken registration after my turnover had reached 90 lakhs. I was not under any contravention of law. So I will pay taxes only on 31 lakhs. So the threshold will be calculated by including 19 lakhs, but I will pay taxes only on 31 lakhs. Right? So we need to remember this. This is time of supply. I would like to just point out one small thing. Time of supply is a separate topic itself. I would just like to point out one small thing, that normally if I'm a supplier of goods, if I'm receiving any advances, there is no taxes on me till the date I issue the invoice. So whenever I'm issuing the invoice, then only there's a tax on me, right? Normally if I'm a dealer of goods. But please remember, this exemption is not applicable for composition dealers. That means a composition dealer is required to pay taxes also if he's receiving any advances on goods. So if he receives advances any goods, in that case, he's required to pay taxes on that advances for goods. For services, everyone has to do it, of course. For goods, composition dealer also have to pay. So if you look at notification 66 by 2017, which had exempted the persons to pay taxes on advances, right? This was the notification which has exempted to pay taxes on advances. It includes registered persons under composition scheme. That means they had not exempted composition dealers. That means composition dealers will have to pay taxes on advances also. Apart from this, there is no difference in the time of supply for normal and composition dealer. With this, we come to the end of our discussion. I would like to thank each one of you for giving me a patient hearing. Over to you, Chinna sir.
Yes, sir. I'm seeing that. Is there any FAQs? I got only one FAQ, sir. Can the trader in notified goods opt for a composite scheme?
Yes, the trader in notified goods can opt for it. Only a manufacturer cannot opt for it. Absolutely correct.
Okay. Okay.
Any other questions, sir?
No, the FAQs, I got only one thing, sir. Rest is there, and I'm checking in the chat box. In chat box, there is a question, sir. Are the forms same for the dealers opting for the earlier composite scheme or 6% composite scheme?
Yes, yes, yes.
Okay, okay.
It's the same.
The other one, sir, general question. Sir, one query out of my box. One supplier cancelled my invoice. Shall I need to reverse my ITC?
So the supplier, okay, first of all, if the supplier has cancelled your invoice, that means you are a seller yourself, right?
Correct.
That means if I am a seller, if I am selling something to someone and the other person is cancelling my invoice, that means he's not accepting my invoice. So the question comes, there can be two kind of scenarios here. First scenario, that it is a bad debt, that's why he is not accepting. Second, the supply itself is returned. If it is a bad debt, then you cannot reverse your output. You cannot reverse your input, first of all. You cannot reverse your output. But in case he is if in a bad debt, you cannot reverse your output. But in case the supply is returned in the first place and credit note conditions are satisfied as per section 34, then you can reduce your output.
Okay. That's it, sir. So thank you very much, CA Shubham Ketanji. It's really it's a wonderful session in the evening. You have taken the session so explained and several complicated issues of composite schemes in GST. I think with your young and dynamic experience, I would certainly say our members got benefited with this session. I convey my heartful appreciation and thanks for ready accepting our SIRC invitation and joining us for the delivery of wonderful session in the evening of our precious time. And I thank the members for nice and active participation. And thank you each one of you. And all the best. And stay home, stay safe, and continue the office work at office as well as the house. Thank you so much. Thank you,
and thank you to SIRC for having me, and to all the members for listening to me so patiently. Thank you.
Thank you. Thank you all.
Thank you, sir.